Hello traders, Gary Wagner here. It is 11:12 in Honolulu and 5:12 in New York on Tuesday, 31st day of May, 2022, and this is the daily report for gold and silver. A combination of dollar strength and market participants bidding the precious yellow metal lower took gold futures basis the most active August contract to $1,840. That is a decline of almost a full percent, $17.30. When we look at the dollar, we see that the dollar increased by approximately 0.5%. So we can easily derive that today's decline in gold was about a 50-50 combination between dollar strength and selling by market participants. First, to our current activity regarding our trades. If you recall from last week, we entered the market basis the August contract at 1849. We raised our stop up to 1851. In Forex up to 1846, maintained our GLD stop at 171.20. That stop was executed today. We got knocked out of our trade basically at a push. We got in at 49, out at 51, a $2 profit. We then entered lower, buying the August future contract at 1843. We currently have a stop at 1833. Low today, 1837.60. As far as Forex goes, we entered the market at 1840 with a stop at 1831. Our GLD trade remains open. While today's decline did not result in severe technical chart damage, it has come fairly close to breaking below gold's 200-day moving average. The 200-day moving average is at 1839.90 and current pricing is at 1840. So we are about 10 cents away from that. Although we have a shortened trading week this week with Memorial Day yesterday, the question is whether or not 1840 or the 200-day moving average will provide support for gold and we'll see it bounce higher, or if it will break to the downside. We believe that there is a higher probability that gold will find support at this price point than trade lower, and that is based on a couple of things. First, it has been dollar strength or weakness that has truly moved gold prices higher or lower. In the recent case, we have seen gold move higher based on the dollar declining from these highs up here, just over 105. Today, the dollar index increased by about 0.5%. That's a small green candle, closing at 101.785. Our assumption that gold could move higher is based on historical data of the dollar index and how it has reacted the last two times the dollar index hit this apex right at around 104. You can see on the left-hand side of this weekly dollar chart that we hit just above 103. This occurred back in 2017, and then a second or double top occurred in 2020. On this occasion, it rose far above that, hitting just above 105, but now began to come down. And what is most interesting is that on the last two occurrences, we saw a tremendous decline, a 16% decline in the dollar value back in 2017 and 18, and a 15% decline between 2020 and 2021. The fact that we saw tremendous dollar weakness come in after hitting the apex that we have been speaking about does not necessarily guarantee that we will see that happen again. However, it is a good technical assumption to base our current trade on. Therefore, traders, maintain your current long position as well as your stops. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.